Hello and welcome to our webinar on financial English. Today we will talk about risk management and in particular what special vocabulary we need to know in order to understand how risk management works. What is risk management? Risk management is the activity of calculating and reducing risk so that an organization does not fail or lose money. There are different kinds of risks associated with handling a business. We will start by looking at the operational risk. Operational risk. Operational risk is internal to a business or to an organization. It usually depends on the inadequacy of people, system, or processes in place. And these usually include security risks, legal risks, fraud, as well as environmental risks. And again, all of these risks are internal to an organization. The next type of risk is currency risk. Currency risk. And this type of risk is related to the exchange rate of a certain currency or the difference between the exchange rates of the operating currency and the import or export currency. That is why international businesses have to consider this risk very carefully. And this kind of risk heavily depends on the fluctuations in currency exchange. And now let's talk about credit risk. Credit risk. Credit risk is very important for financial institutions that lend money to individuals, as well as for businesses who would like to purchase products or services on credit. Credit risk is involved when a client or a borrower defaults on their debts, which means fails to pay their debts. And credit risk can be mitigated or avoided by having a very accurate credit check conducted before a client becomes truly a client of your company, and involving a third-party guarantee, and of course using insurance. And now let's talk about reputation risk. Reputation risk. Reputation risk is possible damage to organization's reputation. What is organization's reputation? It's its standing in its community, in its country, in the news, and in the minds of its customers. Reputation is an intangible asset. We cannot physically touch it. It exists only in the minds of the people. And it has to do with corporate trust. Corporate trust is how much your customers trust your company, how much they're loyal to you, and how much they're willing to continue their business with your company or organization. Let's look at the important vocabulary that we saw in the last 4 slides. Calculate. Calculate. Berekenen. Reduce. Reduce. Verminderen. Internal. Internal. Intern. Inadequacy. Inadequacy. Ontoerekenheid. Fraud. Fraud. Fraude. Exchange rate. Exchange rate. Wisselkoers. Fluctuations. Fluctuations. Fluctuaties. Currency. Currency. Valuta. Default. Default. In gebreke blijven. Credit check. Credit check. Kredietcontrole. Reputation. Reputation. Reputatie. Intangible. Intangible. Ontastbaar. And trust. Trust. Vertrouwen. And I hope you find these words useful and add them to your financial English vocabulary. And we would like to thank you again for following Eliseo Talen webinars and for following us on TaalTV. Please subscribe. And if you would like some more information about our language courses, please visit us at www.eliseotalen.nl.